Seeds of Wisdom RV and Economic Updates Sunday morning, December 22, 24. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good morning. Dinar recaps. XRP lawsuit news. Ex-SEC lawyer reveals Ripple was discussed weekly, predicts possible dismissal of appeal. Ripple SEC closed meeting sparks rumors of potential case dismissal, fueling XRP community's hope for a major rally ahead. Former SEC lawyer predicts possible XRP case closure, as government shutdowns and RLUSD launch impact Ripple's future prospects. There are rumors that Ripple and the SEC will have a closed meeting, which could lead to a significant development in the XRP case. Speculation suggests that the meeting may result in the case being closed or dropped entirely, with answers expected soon. A user reacted to this, praising the XRP community for its unwavering perseverance. Despite being wrong many times, the community continues to stay positive and hopeful, showing up every month for updates. Ex-SEC lawyer Mark Fagel believes the SEC will continue on its current path for now, filing the opening brief as planned. He also pointed out that the new SEC chair could take some time to be confirmed, and it's possible that they may vote to dismiss the appeal. Though it's an unusual step, Fagel thinks it's a possibility if the right people are in charge. SEX shutdown, RLUSD live and more. In other news, the SEC is preparing for a government shutdown, which could impact its operations. Government shutdowns and financial instability, like the US government's debt issues, have added pressure on the market. Ripple's RLUSD launch had positive price action initially but has since been impacted by market downturns. Brad Garlinghouse, Ripple's CEO, believes RLUSD will be big for the company's future. With SEX clarity and possible case dismissal, XRP might be up for a massive rally. Google to require UK crypto ads to register with financial regulators starting January 2025. The new policy will take effect on January 15, 2025. Hello, world. Google has announced a policy update requiring advertisements for digital asset exchanges and wallets in the United Kingdom to register with the Financial Conduct Authority, FCA, before being allowed to run on its platform. The new policy will take effect on January 15, 2025, the search engine company said in a recent announcement. Under the updated rules, advertisers offering crypto exchange services or software wallets in the UK must meet specific conditions to promote their products. UK crypto firms need to register with FCA. Chief among these is registration with the FCA, ensuring compliance with the country's financial regulations. Additionally, Google will permit advertisements for hardware wallets that store cryptocurrency private keys, non-fungible tokens, NFTs, or other digital assets. However, these hardware wallet providers must avoid offering ancillary services such as buying, selling, or trading digital assets. While the search giant did not provide additional requirements for hardware wallet ads, it emphasized that all advertisers must adhere to local laws in their targeted regions. As a reminder, we expect all advertisers to comply with the local laws for any area that their ads target. This policy will apply globally to all accounts that advertise these financial products, Google said. The new policy underscores the growing scrutiny of crypto-related advertisements worldwide as regulators attempt to curb misleading promotions. In the UK, the FCA recently issued a warning about the Solana-based meme coin and NFT project, Retardio. The regulator flagged the project for unauthorized promotions targeting UK consumers, cautioning that investors might face financial losses if the company fails. Elsewhere, Nigeria's Securities and Exchange Commission, SEC, has also introduced stricter advertising guidelines for crypto products. The SEC now requires virtual asset service providers and influencers to secure agency approval before publishing promotional materials. Google Ads promotes fake crypto websites. As reported, a sponsored Google ad posing as a link to Sony's blockchain project, Sonium, was exposed as a cleverly disguised crypto wallet drainer. In October, a search for Sonium on Google led users to a phishing site designed to steal crypto assets. The ad linked to a website with a domain name similar to Sonium's official site, which appeared as a legitimate yet unfinished landing page for a radiology service based in the UK. In another incident, a fraudulent cryptocurrency wallet app on Google Play reportedly stole $70,000 from users in a sophisticated scam that has been described as a world first for targeting mobile users exclusively. The malicious app, named Wallet Connect, mimicked the reputable Wallet Connect protocol but was, in fact, a sophisticated scheme to drain crypto wallets. The deceptive app managed to deceive over 10,000 users into downloading it, according to Checkpoint Research, CPR, the cybersecurity firm that uncovered the scam. The scammers behind the app were well aware of the typical challenges faced by Web3 users, such as compatibility issues and the lack of widespread support for Wallet Connect across different wallets. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps. Economic expert Mustafa Akram Hantoush said, "Changing the exchange rate in the current situation is useless. Because the problem is not in purchasing power, but in the demand for the dollar outside the platform due to small traders trade with Iran. And some materials that are imported outside the platform due to high customs duties or their ban, in addition to the citizens' desire to save the dollar." Hantoush added to Al Jazeera that it is better to find solutions to the increasing demand for the dollar outside the platform instead of resorting to changing the exchange rate, because that will complicate the monetary situation even more than it is now. Clear policy. According to an official at the Central Bank of Iraq, dealing with the dollar file was based on various opinions built on a series of studies and field research. The official, who preferred to remain anonymous, explained to Al Jazeera that the bank adopted two main approaches to address the crisis. The first is to expand the use of international currencies such as the Chinese yuan, the Indian rupee, the UAE dirham, and finally the Saudi riyal, with the aim of reducing dependence on the dollar. The second approach focuses on developing the operational capabilities of local banks to become more qualified to participate in transfer operations. For his part, banking researcher Mahmoud Dagher explained that the fluctuation of the Iraqi dinar exchange rate came as a result of two decisions to reduce the value of the dinar in 2020 and then raise it in 2023, which represents a clear intervention in the fixed exchange rate system, which created ongoing economic confusion. Dagher told Al Jazeera that any new change in the exchange rate reflects the absence of benefit from previous mistakes, as wrong interventions in monetary policy lead to adverse results that increase the instability of the financial market. As for the economic expert, Adi Al-Alawi, he confirmed that the biggest mistake that the government can make is to manipulate the dollar exchange rate through sudden decisions, because that has a direct impact on the national economy and shakes investors' confidence in the financial system. Al-Alawi added to Al Jazeera that the government's continued taking of ill-considered decisions regarding the exchange rate will lead to the erosion of international and local confidence in the Iraqi economy, which will weaken the ability to attract the investments necessary to improve the economic reality. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.